Hello, everybody. Welcome to this special session on Decoding Budget 2026. Um, the budget was presented by Mrs. Nirmala Sitharaman 2 days back, and there's been a lot of questions coming our way about what is it, how is it, what more can we know about this. And it has been a very, very interesting set of questions that have been coming our way. And at Lajja, as always, as every year, soon after the budget, we bring in our financial expert to decode it for us, to tell us a little bit more about the finance budget and how it's going to impact us. And before we get our speaker here, let me quickly give you a sum up of some of the things that I understood from the budget. One is that the budget 2026 is primarily focused on economic security, self reliance, and indigenous development with a focus on simplification and better compliance. It also pays emphasis to the growth journey of MSMEs by improving access to structured capital. And more importantly, for women, since we are Lajja and we talk about women, Budget 2026 is looking at empowering women led businesses. And to support this, the government is establishing something called as the She Help Entrepreneur Marts, which is the SHE Marts, which will function as physical retail hubs in rural and semi urban clusters. Now, these spaces will enable women entrepreneurs to showcase and sell their products, helping them reach local markets more effectively. Now, mota moti, this is what I had to share with you. But to share more details about and give us a basic, deep dive into what the budget 2026 entails for entrepreneurs, for the people in the country, is our guest, our financial expert, Mr. Devang Ambavi. He is the proprietor of Ambavi and Associates, a boutique firm which specializes in providing tax and exchange control advisory and compliance services. He has worked with PricewaterhouseCoopers for over 12 years and has experience in advising clients in multidisciplinary areas, including international tax, domestic tax, exchange control, and regulatory matters. So let me quickly welcome Devang to the screen. Thank you, Devang, for, as always, taking time out for Lajja and willing to come on board right after the budget and share all the details that you can to simplify it for us. So the stage is all yours, Devang.
Yeah, thank you so much, Vanna, for the kind introduction. Very good evening to our participants who are joining live. Greetings for the day for the participants who are viewing the recorded webcast. Uh, Thank you, Team Laja, for giving me an opportunity to present and discuss the union budget proposals as presented by our Finance Minister last Sunday, which was on 1st February 2026. Uh, I agree with Vanda. This budget was interesting and pleasant to the extent that it focuses on simplification. Uh, it focuses on accurate compliance, and the budget proposals by and large are designed in a manner which promotes this principle. Before we discuss the tax aspects of the budget, I'll quickly touch upon what are the key highlights, right? Every year we have these tax proposals, the spending, government spending on particular sector. What is it that is going to benefit the nation, right? So key highlights according to me for this budget is the government is focusing on job creation, through support to manufacturing sector, infrastructure sector, energy sector, and MSME sector, right? The target of the government is to bring the fiscal deficit to 4.3% of the GDP for the coming year, right? This will be lowered compared to 4.4%, which was for financial year 25-26. While the reduction might suggest a very small percentage, but from a country perspective, even this reduction in fiscal deficit benefits our nation at large. right?
Yes,
Uh,
yes.
Moving towards the government's expenditure, right? What we are told is, government is planning to spend 53.5 trillion, specifically on, the sectors which I, just spoke a minute back, right? This, clearly indicates, government's a plan to ensure there is a, balance in terms of, the expenditure towards the all sectors rather than focusing only on one or two sectors. There is a special emphasis we find on the infrastructure, which remains, priority of the government.
Yes.
That includes not only road infrastructure, but even, waterways. There is a intent to expand the, inland waterways and also push for the coastal shipping. Similarly, even for the logistics and the transport sector as well, the efforts are to ensure there is a reduced cost in overall operations and to ensure there is efficiency, for the businesses at large. Right? With
Good.
this, I'll quickly move on to, to discuss what are the key tax proposals,
That would be
which
good.
have been presented by our finance minister, uh, and which will be effective from 1st April 2026, right? I'll just take a minute to share my screen.
Yes, yes.
Yeah. Is my screen visible, the presentation
I
on
will
tax
just add
proposal?
it. Yes.
Okay, perfect. So I've divided the discussion broadly in three parts. One is, the changes
Okay.
on the personal taxation front, second on the corporate taxation, and third, the other changes. So what we are told in this budget is, there is no change in the tax rates, there is no change in the tax slab, so which means the surcharge and the personal tax regime, which was there a year before, will be exactly same even for financial year 26-27, right?
Hmm.
But the key change which is happening at the back end is the entire income tax framework was governed by an act which was 1961. The
Yes.
government's This government's plan, right? They have not only, so if you've seen last kind of a decade or so, there has been a transition in terms of, the regulations, right? What we saw is, the VAT and the excise was kind of, so to say, converted into GST, which we have in
Hmm.
one nation, one tax.
Yes.
Similarly, the Companies Act was transformed into a new act. The RERA regulations came into the picture. So another last, so to say, one of the most important legislation, which is the Income Tax Act, which has now been repealed, and we'll have a new Income Tax Act, which is much simpler, which will have less sections, and which will, as in the effort is to kind of minimize the number of section, redundant provisions which were there, and to
Yes.
make it
Yes.
simpler even for the layman. So maybe that, keeping that perspective in mind, right? Government has not kind of, taken any drastic steps to, make many substantial changes. The changes which we'll discuss in the subsequent, uh, you know, discussion, you'll observe a lot of
Yes.
changes are these either clarificatory in nature, or they are in a way to ensure the compliance or the administration is in smooth, right?
Hmm.
So moving on to, so there's one change which is proposed in the taxation of buyback. Now, if the US would recall, the taxation of buyback has been subject matter of debate since last like five,
Yes.
6 years, right?
Yes.
Earlier, it was subject to what we call it as a buyback distribution tax, right? Where the company, making the buyback had to pay certain taxes, and thereafter the
Hmm.
proceeds were exempt from tax in the hands of shareholders. Thereafter, government changed the law and, amended it to so that the distribution which the shareholder receives from the company is treated similar to like a dividend income, which means the entire proceeds was subject to tax in the hands of shareholders, and the cost which the shareholder incurred to buy those shares was treated separately. This
Yes.
kind of, discouraged a lot of, listed companies to go into buyback, right? Data available on the public domain clearly suggests that. So what in this budget they have proposed it, they have again gone back to the most earlier provision, which is that any distribution the shareholder receives under a buyback is taxed as capital gain. Uh, the rate of
Okay.
tax is 12.5% or 20%, depending upon whether it is short term or long term. But
Okay.
if the shareholder who's receiving this proceeds is a promoter, then there is a higher tax rate. For a domestic company promoter, the tax rate is 22%, and for other promoters, the tax rate
Mm,
is 30%. Uh, this amendment, if I were to kind of briefly summarize the impact, this will benefit a lot to a large scale retail investors, who are investing directly in the shares of the company. And in
mm,
the months to come, we would kind of see definitely some buyback of securities, which as such we've not seen in last year or year and a half.
okay.
One
Okay.
benefit, another beneficial provision which they have done it is rationalization of TCS rate is being proposed, right? As you would see on your screen, right? Under the current legislation, if the remittance is under an LRS scheme of Reserve Bank of India and which is up to 10 lakhs, then there is no TCS.
Mm,
Uh, if it is for education and medical purposes and the remittance is more than 10 lakhs, so under the current regime, the TCS is as 5%, which has now been proposed to brought down to 2%.
2%.
Similarly, for sale of overseas tour or package, where the TCS was 5% and 20%, that is now being proposed to reduce to 2%. Right?
Okay. Mm,
This was an ask of the industry, right? Just to kind of spend a minute. TCS is an additional amount which
mm,
the individual pays to the bank, right? So if
yes.
you are sending money abroad, let's say 10 lakh rupees, for example, right? So in addition to 10 lakh, the banker will take additional 5%, which is 50,000 from the remitter, and deposit this 50,000, in against the pan of the remitter. This 50,000 will now reduce to 20,000, right?
Mm,
Which is kind of a so to say a big relief. The
yes.
reason is because
Absolutely.
the Indian rupee has depreciated considerably in last year.
Mm,
So cases where, let's say, the foreign education fee was $10,000, that same remittance, few years back would be much lower INR amount, but in the current INR terms, the INR amount would increase substantially. And with a higher
increase.
TCS,
Yes.
that will involve a good amount of funds being blocked, for a period of, year and a half in many cases. So I would
Mm,
suggest this is a
true.
very welcome relief, for taxpayers.
Mm, true.
Uh, Another update, the relates to taxability of sovereign gold bonds. Uh, what we are told in this budget is, any maturity proceeds received by the individual at the time of redemption of the sovereign gold bonds will be exempt only if the investor had subscribed to original issue of these bonds and had continuously held these securities until redemption. Uh,
Okay.
so if you were to kind of divide it into a couple of scenarios, so wherever investor has invested in sovereign gold bonds and he is receiving funds upon maturity, the only scenario it will be exempt is if the investor was an original subscriber and had held continuously over the tenure of the bonds. In any
Mm,
other scenario, so for example, if the investor had you know purchased these bonds on the stock exchange, or if the investor had sold the bonds on the stock exchange, or investor purchased these bonds, sold it, and again bought it. In all these three scenarios, the gains which an investor derives on redemption will be taxable for the
mm,
investor, right? The
yes.
impact of this amendment kind of significantly reduces the charm which the sovereign gold bond had, right? If I were to say that.
Yeah.
Now the tax exemption has been limited only to few category of investors who were the original investors. So what we have seen is in last couple of days is the price at which the sovereign bonds were traded on the stock exchange has also seen a correction.
Yes, true.
Another welcome amendment is for individuals and HUF taxpayers, specifically when they are buying a house from a seller who's a non-resident, as in any mobile property, not necessarily house.
Hmm.
Under the
Hmm.
current framework, the individual or the HUF, had to apply for a tax deduction account number and would have to file a TDS return, right?
Hmm.
What we are told in this budget is they plan to amend the framework whereby the individual or an HUF will be, permitted to make the payment of the tax on his own PAN and eliminate the requirement of obtaining a TAN number.
Okay, so it kind of cuts down on the additional
Additional.
paperwork and all of that.
Yes, because what used to happen in most cases, the individual would have a one-time transaction of deducting TDS, right?
Hmm.
And that TAN number would permanently flag in the system as, the person had filed TDS return only for one quarter and thereafter he never filed it.
He never
So
filed. True.
in a way, it would kind of, bucket that TAN number as a non-filer, which again was
Hmm.
not correct,
It's
right?
not
So
correct.
again,
Absolutely.
it's a welcome move in that sense.
Yes.
Another important amendment which they have proposed is they have given an amnesty scheme for individuals who are holding assets outside of India
Hmm.
and had either not reported these assets or had not paid income on these assets which are held overseas, right?
Hmm.
What the government has said is they will come out with a voluntary disclosure scheme for small taxpayers, which will be
Hmm.
called as Foreign Assets of Small Taxpayer Disclosure Scheme 2026. Under
Okay.
this scheme, wherever the aggregate value of asset and the income is less than 1 crore, the individual will have an option to make payment to the government, right? In the
Okay.
scenario one where the asset is less than 1 crore, 30% of the foreign asset value as on 31st March 26, 30% of the undisclosed foreign income, and 100% of the amount calculated, right? This would be
Okay.
available, as I said, only in cases where the foreign income is less than a crore and foreign income and the asset is less than 1 crore and they were not disclosed in any of the past tax filings. Right?
Okay.
Another kind of situation what they have given is where the asset located outside India is more than 5 crores, but the asset was acquired from the income which was arised outside India when the individual was a non-resident
Hmm.
or he had acquired from income which was already offered to tax in India, right? So in this scenario, they are envisaging kind of taxpayers who has say gone outside India for the purpose of employment, right? He stayed overseas and he acquired an overseas asset. Then that individual came back to India, but for some reason, right, he is not reported these overseas assets, right?
Hmm.
To give you a further example, right, there could be an individual who's say a seconded, from an IT firm to an overseas location. He worked there for say over 10 years.
Hmm.
While he was working overseas, receiving salaries from the overseas asset, right? He invested monies in assets outside India. Then he relocated back to India, and for some reason, the income which he was received from these overseas assets, he did not declare it in India, and the overseas assets also he did not declare in his IT return. So what
Okay.
the government is saying is, the income which you earn, the tax rate was always 30%, right? So we are giving you an opportunity, right? So uh, if you had not disclosed this income, outside India, you disclose this income now. If you have not
Okay.
disclosed this asset, then you disclose it now, right?
Okay.
So which comes into this, first bucket where you pay
Hmm.
30% of the foreign asset value or you pay 30% of the foreign income, right?
Hmm.
Second scenario considers a scenario only in cases where there was a non-reporting of the asset. The income was always offered to tax in India, or the income was never subject to tax in India. So this would be a scenario where the individual came back to India, right? He had an assets of, let's say, 2 crores outside of India. This he had purchased from his salary which he received overseas, but for some reason he missed to report in his IT. So here the government is saying you pay a fine of rupees 1 lakh, right, and report these assets, and in return we will give you immunity from any penalty or the prosecution code. Right?
Okay.
Under the current Black Money Act, if there is non-disclosure of any foreign assets, the amount of which is more than 20 lakhs, then in addition to the fine, the individual could also be subject to prosecution. Right?
Okay.
So the immunity is given from the prosecution, provided the taxpayer pays the relevant fine or the necessary tax, as the case may be.
Okay.
Right?
Interesting. Now we need to see how many are actually doing it.
Yeah, absolutely. In practice, we've had few cases where people had migrated from outside India. They had ESOPs. Person individual working in India, but the parent company is overseas. The ESOPs were issued, and for some reason, the ESOPs were never declared. In the individual idea,
Hmm.
right? So you'll have these few cases. So the plan or the intention of the government is to give this period of 6 months. So amnesty period is the 6 months. The amnesty will be open
Ah,
for a period of 6 months, and within 6 months you pay the necessary tax, and you get complete immunity from prosecution and fine, right?
okay.
So,
Okay.
when we discussed, on, you had kind of briefly touched upon, what is the theme of the budget. So this is another
Hmm.
theme, right? Where the government is insisting that, if there is a scenario where you've missed paying tax or missed reporting the foreign asset, you pay it now and, get yourself, free from any, prosecution in future.
A clean ghar wapsi.
Yes, that's right. Yeah. So,
True.
another
Actually,
kind
we
of,
have Suresh Mehta who has asked us to explain this in detail. Suresh, I hope this does answer your questions. If not, you can ask a specific question if you have any. Yes, Devang, you were saying?
yeah. So, just moving on, there's another kind of relief which is given, where the interest has been awarded under the Motor Vehicles Act. So what we are told in this budget is, in scenario where such interest is awarded, it will be, completely exempt from tax.
Okay. All right.
Moving on, I'll briefly touch upon the changes under the corporate taxation and the related changes. So similar to for individuals, there is no change in the tax rate. There is no change in surcharge for the corporates. So by and large, the tax regime which was prevailing earlier will follow even in financial year 26-27. There is a significant change in the MAT provisions. MAT provisions under the current law are applicable only if the company has chosen not to comply with the new tax regime, right? Uh, the way the individual taxpayers have this new regime and old regime, similarly, even the corporates have the concept of new and old regime. Only under the where the taxpayer is under old regime, he is subject to MAT, right?
Okay.
So what we are told is the MAT rate has been reduced from current 15% to 14%.
Okay.
Then what we are told is, once the taxpayer pays this 14% tax, that will be treated as a final tax and no further MAT credit will be allowed to the taxpayer,
Okay.
right? Till current year, whenever a taxpayer would pay taxes under MAT, the MAT so paid was allowed as a credit in the subsequent years, which from financial year 26-27, we are told will not be available if the taxpayer is paying tax under the old regime.
Okay.
However, where the tax is paid under the new regime, right, and there was certain MAT credit, then that MAT credit will now be available for set off under tax under the new regime, right? So, which clearly indicates that the government's intention is to ensure the taxpayers transition from the old tax regime to the new tax regime, even for the corporates.
Hmm.
There is a extension of tax holiday period for units which are
Yes.
located in the gift city. There was a sunset clause which now the government has extended to 20 years, out of the 25 years. And not only that, after this 20 years are over, the government has said that the tax rate will be capped at 15% for the entities units which are operating from gift city. So this is again a welcome move for the
Yes.
entities which have presence in gift city. Another related amendment is the contribution, employers' contribution towards statutory funds. This was available as a deduction only if it was paid within the due date. Now the government has rationalized that and has stated that the employee's contribution will be allowed as a deduction even if it is paid before filing of tax return, right?
Okay.
uh,
That's good.
there is another important amendment in the tax proposals. What we see is for data service centers. What the government has said is any foreign companies which is engaged in data center services in India will get complete tax holiday till 31st March 2047, right? Uh, a lot of debate in general is happening around AI, around data centers in general. So this clearly indicates that the government wants to give incentive to investors who are investing in data service centers, and they are kind of inviting them to come to India, invest in the data center services, and we'll give you necessary tax holidays which you want, right?
Hmm.
So this is again a very welcome move. Years in the years to come, we will know that whether the relevant infrastructure is also in place
It's
which
also
the
there.
data
Yes.
center services require, right?
Yes.
And assuming that an infrastructure is also there, then it's definitely kind of gives an arbitrage to our country to invite these foreign investors to come and invest in India.
Yes. There is hope.
uh, yeah. Other related amendment is what we are told is the rate of STT shall increase for FNO transaction. What is stated in the budget speech is that this increase is to kind of disincentivize the retail participation in an FNO transaction. Uh, there is SEBI report which says that a lot of retail investors have lost money in FNO transaction. To discourage participation of retail investors, the income tax department or the government has proposed to increase the rate of STT. Another important amendment which the viewers should keep in mind is the interest expense which is incurred for earning any dividend income or income from mutual fund units now will not be allowed as a deduction, right? Until now there were rules relating to deductibility of such interest income. In this budget,
Hmm.
what we are told is from 1st April 26 no interest expense will be allowed.
Oh, okay.
Other important amendments which relate to tax administration, right? There are kind of three important amendments which we'll discuss. In the current law, a revised taxpayer could file revised return by 31st December of the relevant assessment year.
Hmm.
If I were to explain, let's say for financial year 26-27, the tax due date for the individual taxpayer was to file the return by 31st July 2027, and the
Hmm.
revised return he could file by 31st December 2027.
Hmm.
Now what the government
Yes.
has said that we'll give you additional 3 months and you can file your revised return by 31st March 2028. Right? Uh, Only catch here is there will be a nominal late fee which will be applicable when the return is revised. According to me, this is again a very welcome move. Uh, because what happens is many times the taxpayers would file their tax return, sorry, and subsequently they would realize that there are some kind of apparent mistakes which have been noticed in filing the tax return. But because the due date of revising the tax return was very short, after 31st December, even though knowing the tax mistake, the taxpayer could not kind of file the revised return. The only option,
True.
he would then have to file an updated return, which would involve paying additional tax.
Additional tax,
So
yes.
this additional tax kind of this so government has given this additional 3 months window whereby an individual or the taxpayer can file a revised return and need not pay additional tax, and has replaced it with nominal late fee of 1000 or 5000 as the case may be.
Okay.
So this would definitely kind of help taxpayers to correct their mistakes and revise the return if they
Absolutely.
need to. Right?
Absolutely.
Another important amendment is the due date for taxpayers who have income from business and profession and who are not subject to audit. The earlier due date was 31st July, uh, which now been extended to 31st of August. Uh, Another important amendments relates to filing updated tax returns. The taxpayers will now be allowed to update their tax return where the losses which they had claimed in the original return has been reduction of losses. So in simple words, if a taxpayer had claimed a loss of 10 lakhs in the original return, and if he chooses to reduce the loss by 4 lakhs and reduce it to 6 lakh, then now the law will allow him to file an updated return.
Okay.
Similarly, they have also relaxed or given an opportunity in cases where the taxpayer has received a reassessment notice, right? Uh,
Okay.
I'll just explain here, scenarios in which
Yes.
this would happen, right? So, in a usual case, the individual or any taxpayer would file the return. After after a year or so, the you within a year or so, the taxpayer would receive an intimation, which means the return has been accepted, right? Say after 3 years, there is a notice which is received, uh, and if it is a reassessment notice, and at the same point of time, the time limit to file the updated tax return has been expired, or if a reassessment notice has been issued and the law was drafted in a manner where a notice has been issued, you cannot file an updated return. So now that what the law says is, even if a notice is issued and if you realize your mistake, you file your updated return, you pay the necessary tax, you pay the necessary interest, and you pay an additional 10% of the aggregate tax, whereby once you file an updated return, there will be uh, immunity from penalty, right?
Okay.
So, which in other words, penalty in many cases was 100% of the tax which a taxpayer had to pay, right? So now in the same scenario, SSE is offered another opportunity to upfront, file an updated return, pay certain additional tax, and get 100% immunity from penalty for underreporting or misreporting. So again, this
Interesting.
amendment, as you rightly said at the start of the discussion, is aimed to ensure, there is an efficiency, in the tax administration, and it will also reduce substantial litigation. Right? Uh, Another amendment,
Yes.
the last one in my slide, which relates to tax on unexplained cash credits, investments, assets, expenditure, which in the current regime was 60%, has now been proposed to reduce to 30%. This again is a very welcome move. In
Very welcome.
practice, we have seen scenarios where, if there was a addition of say 10 lakhs, right? Then there would be a scenario where 6 lakhs is a tax, then there will be interest and then penalty, which would many cases be more than the amount of the unexplained cash or unexplained investment. So the tax rate now been reduced to 30%, which kind of brings down the tax exposure substantially.
Yes.
Right?
Oh,
So by and
interesting.
large,
So,
yeah.
yes.
So by and large, these were the key tax proposals. What we have seen in this budget.
Thank you for putting up these slides and explaining it as simply as possible. But coming from Laja, and since
Yeah.
this is a space where we give women the heads up, and we try and support women. What I want to ask you is, what is the overall intent of this budget when it comes to supporting women-led businesses? What is it that how are women-led businesses or women entrepreneurs benefiting, or is there something that we can look forward to?
Right. No, fair point. In the budget speech and the key announcement, there are a couple of areas where the finance minister has specifically kind of mentioned the announcement which they have made for women in general.
Hmm.
What we are told in this budget is, there is a concept, there is a program of the government around Lakpati Didi.
Hmm.
This is
True.
one of the most successful scheme of the government where they have given capital for empowering women in general.
Hmm.
What we have told is, they have committed, uh, as in the past, this program has benefited more than 3 crore Lakpati Didis, right?
Okay.
With women earning more than 1 lakh per annum, right? Now, this budget introduces what we call as the Lakpati Didi 2.0, which would kind of, you know, uh, give additional kind of capital to this program and would definitely, help women in rural areas. The government
Okay.
has also specifically said that there will be an advanced technical training and digital financial literacy, which will help women transition their livelihoods in the rural areas and ensure they are introduced to much formal business ownership. So, there
True.
is one such program. Another one which you all mentioned at the start of our discussion was She Mats for rural
Hmm.
women entrepreneurs. Again, this initiative is planned to have an established community-owned retail outlets, not only rural areas, but even in semi-urban areas.
Hmm.
Plan is to have kind of a cluster kind of a setup where you have these outlets where the rural women entrepreneurs will be able to market and sell their products, you know again, which will give them the expanded reach, visibility, and make them independent. uh,
Okay.
Another kind of reference what we have told is government's intention to promote girls hostel in every district. If
Yes.
kind of
Hmm.
this program is kind of implemented, then it will definitely give girls uh, much safer place to stay, and
Agreed.
which will also promote them for higher education, including professional education, right?
Yes. Agreed. Agreed.
Currently, government
Yes.
have a lot of programs which typically cater to school or secondary schools or college for that matter, but a hostel which give them access to a safe house and also give them opportunity to pursue higher education.
True.
Uh,
But like you were saying, a lot of this is centered around supporting and enabling or empowering women from rural sectors. What about
that's it.
women from the urban? Since we are talking about those kind of women,
Yeah.
what I wanted to, we also have to give them the benefit of doubt that because they are from an urban setting, they'll probably read up a little bit more, do their own research, and figure out how the budget will enable them to grow. But what I want to kind of put out there is, what do you suggest, what should women entrepreneurs do differently in 2026 to align with this budget? Is there anything that they can specifically do?
No, so one such sector which I feel is beneficial for the urban women is the government's intent to support micro, small, and medium enterprise,
Hmm.
MSME as we call
Yes.
it, right?
Yes.
in this budget, there is a reference that, the government will introduce a dedicated, 10,000 crore SME growth fund.
Hmm.
Uh, and this fund will be used to create, future champions and it will incentivize enterprises, right? So while this is not specifically earmarked for women entrepreneurs, but it is specifically earmarked for SME growth fund, right? So if there are
Hmm.
such SME enterprises which are led by women, uh, you know, uh, then I would suggest, they would definitely kind of, evaluate and examine, how they could benefit out of these initiatives of the government, right?
Absolutely.
Uh, if you see the pattern of how the government has promoted these initiatives, right? Specifically the MSME sector, right? Uh, they have kind of, given this, so for example, if you were to approach a banker, there is a priority lending schemes by many of the banks which caters
Hmm.
specifically to MSME sectors,
Yes.
right? So this definitely, so this is one area which definitely, urban women should explore if it can benefit them.
Yes. Yes.
Second area, again, not necessarily only for women, but what the government has said that they will facilitate professional institutions such as Institute of Chartered Accountants or Institute of Cost and Management Accountants or Institute of Company Secretary. These three institutes to design a short-term or a modular courses and create practical tools which help develop uh, which are specifically developed for population who's in tier 2 or tier 3 cities,
Hmm.
right? So the intent again here of the government is not, to cater to that population which are in tier 2 3 semi-urban areas, right?
Hmm.
The individuals or students may not be, professional chartered accountant or a company secretary or cost and management accountant, but they will now have access to these courses which will be recognized by the government
Ah,
and which will help them, come into mainstream workforce
mainstream.
and work under corporate or MSME or other companies, right?
Okay.
So again,
Fair enough.
this I would say is a very welcome move because, there was a huge gap of the talent when, an individual had just done graduation and a professional, but in between there was very few courses. So now with this announcement, hopefully it will bridge the gap of the talent, uh, which
Absolutely.
specifically was there. Yeah.
Absolutely. Great. So, to all the women who have, joined in and are listening to this or will listen to this later, why just women, even men who will be listening to this, what I would, from the layman's perspective, what I would want to add to this is that, what you should ideally be doing is evaluate if you qualify for the any of these new funding schemes, especially
Mm.
if you are an MSME owner and you're in that bracket. So first evaluate if you qualify for any of these new funding schemes. Register on the TREDS if you haven't already done that. And for women-led units, you should, like we started off with, saying, track the she mart listings and review your compliance systems before the new income tax act kicks in.
Yeah.
So that is most important.
Correct.
So for any other questions, we are always open. You can send us the questions, we can forward them to Devang and probably have him come back again and discuss more questions if there are any. But for now, thank you, Devang. It was very insightful. You gave us a lot of information, and I think these 44-45 minutes we have had a packed insightful session with you. So thank you so much, Devang. And as
Thank you. Thank
always,
you.
every year when the budget comes out, Devang makes time for us, and he does indulge us with our questions and our sometimes not very relevant communication. But yes, so thank you,
Pleasure
Devang.
is
Thank
mine.
you so much.
Thank you, Vanda. Team Ledger is doing fantastic. initiatives. So
Thank you.
kudos to the entire team, and keep doing the great work. Yeah, thank you.
Thank you. Thank you so much. Thank you. So, with that, we call it a day. Take care, and please keep your questions coming in if you have any. Thank you, Devang.
Thank you. Bye.
Bye.